Hey everybody, welcome back to week 13 of our trading watch list. This watch list is applicable for week of September 18 to September 22nd. In these videos, I generally give you my last week's recap of what I did with the trades, and then I'll show you what I'm planning to do next week. If you're a working professional that you want to trade but you don't have the time to sit at 9 to 5, you can follow along the series and you can see how easy it is to sell options and actually be profitable. So without further ado, let's dive in. Last week was a very interesting week. We had a major decline on Friday, but overall, as you can see, Tesla was up 9.2% with Amazon being up 2.5%. Energy is still being up with ExxonMobil was also up for the week for 1.89%. Apple had a major event. I believe it was a very lukewarm reception of the iPhone 15 along with a lot of memes about the USB-C charger. It was down 1.87% for the week. Nvidia was down 4.4%. And we had some losses in the software side of the shop as well. For next week, the major event is going to be the FOMC rate hike meeting. And in my opinion, we could see another rate hike of 25 basis points, which is 0.25%, considering the latest results from the inflation that have come up. When it comes to earnings, there isn't much going on. We only have FedEx and General Mills if you are a dividend investor. Alright, let's jump straight into our trade recap for last week. We'll kick it off with Square. On September 5th, we sold our assigned calls at $57.99, and then we opened a cash secured put on September 8th to be expiring on September 15th, and we got about $69.32. Because the stock was above $52 mark, our contract expired worthless. If you look at our consolidated results, we have so far gained about $369.30 so far since we have been running this particular campaign. The second trade was on AMD. On September 12th, we opened a cash secured put at $102, expiration September 15th, and for that trade we got $69.32. What ended up happening with AMD in particular is the price closed below the 20-day SMA and the 21-day SMA, and this is the cross where we had the downtrend line and the uptrend line crossing, which was coming over here. We saw this major dump right over here on Friday for AMD. Now we also have the MACD below signaling down, so that is short-term bearish for this particular stock. So what to watch out for next week will be, can the price bounce off the downtrend? So then what happened was, when on Friday we saw that big dump in AMD stock, we rolled our contract to expire the following week, and because it was in the money, we got $223.32 for rolling the contract 1 week further out. Rolling a contract is a two-leg strategy, which means that you have to first close your existing open contract and then open the new contract. So in many brokerages, you can do this in one transaction, both the legs. Some brokerages do not have that option. So what we had to do was we had to close our existing put, which was expiring on the 15th, and we had to pay back $53. So if you remember, we got $70 and we paid about $53. So there was still some profit we kept, and then we rolled it where we got $223.32. The consolidated campaign, we have so far achieved $873.90 on AMD campaign. We have been running this campaign for multiple weeks, and the money keeps flowing in every single week on this particular ticker. If you watched my last week's video, I talked about how I rolled Tesla further out to about October 13th, and we got $1,263 where we paid $659 to buy that call. So overall our profit was around the $600-700 mark. On September 12th, as Tesla stock was running up higher, we ended up rolling that contract again for further 2 weeks out, now expiring on October 27, 2023. For closing the existing contract, I had to pay $1,864, but because I opened a new contract 2 weeks further out with the same price point, we got $2,331. In our consolidated campaign for Tesla, which we have been running for multiple weeks as well, we have gained $2,234. Our original cost basis was $265, and our adjusted cost basis is $242.65. This is the power of option. For next week, I will talk about AMD. I'm not going to be opening any new contracts on AMD because I do want to see how AMD perform. We do have this breakdown from the downtrend line, which is a little concerning, especially in the short term. However, if we continue to see further falls in AMD, I might be tempted to open another contract for AMD. We'll see how that goes. Friday was a very interesting day for Square because our cash secured put was for $52. And as you can see, for the entire day since the morning, this stock came all the way down to $52.27, but we found some buying pressure in the last 2 hours of the trade and the stock ended up over $52.83. Now, what is concerning for Square is that the stock is below its support level. The support level is 53.53 for Square, where the stock ended at $52.83. So for next week, when we are watching Square, we want to see if Square can respect this support level, can bounce off from here. If we see a further breakdown, the stock could go all the way down to 51.34, which was the low from November of 2022. So with that said, if I'm looking at opening a cash secured put at $52, which is about a 35 delta, I would close to get about $64-65 for the week. And we'll see how that plays out because these numbers will change as the market opens. The third trade idea that I have for next week will be Shopify, ticker symbol SHOP. I haven't talked about Shopify in a while, but I do run contracts in my different account. Shopify's stock price is very near to its 50-day moving average of about 61.60. We saw that a couple days ago, it touched the 50-day moving average and bounced off. And the stock price is very close again to its 50-day moving average. And we are also seeing the 20-day moving average climbing closer to the 50-day moving average. If it ends up crossing the 50-day moving average, we will have a short-term bullish signal on Shopify. And we could see further new highs for Shopify for next week. Now for Shopify, I particularly like the $60 level, especially on the Fibonacci. And if I want to open a contract for Shopify, I will probably look at opening 2 weeks out, because for a week out at $60, your delta would be around 20, which means that you're not going to get a lot of premium. You only get about 35 cents. However, if I go out 2 weeks at $60, I'm going to be making almost double of it, which is 78 cents. And our delta at that point is still around 27. So our delta goes up a little bit from the previous week. So it's really up to you as a trader how you want to sell options. You can do weekly, bi-weekly, monthly, whichever works for you. In my case, I like to do weekly or bi-weekly so that I can rotate my capital much faster as opposed to blocking my capital for a month or 2 months out. And let me know in the comments if you're enjoying these kind of videos. I'll continue to make them more. And if you enjoyed today's video, make sure you hit the like, click on subscribe and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.